Hi and welcome to pallavijhastocklens. So finally, Infosys buyback numbers has come out. So on 11 September around 10 p.m., Infosys announced its buyback. That is the quantum of buyback it announced. And this is the largest ever buyback that's been announced by Infosys. It's for 18,000 crore rupees. That is the size of the buyback. And this is through a tender route. Okay, so what is tender route? It means that is the company is going to buy back a specific number of shares at a specific price, which is above the current market price. Okay, and this offer is limited to a specific period. The offer is at premium to the market price, that is to the current market price. It is not an open offer, and the shareholders that are willing to sell their shares to the company should apply online. So in this case, what happens is, now that the shareholders know that this is the specified price at which they're going to get these shares, so that if there are more number of shareholders who tender to this offer, that is, if the quantum of shares that is offered by shareholders to the company for buyback exceeds the amount that the company is willing to buy, in that case, what happens is the company buys back on a proportionate basis. Okay, so I've explained the whole history of Infosys buyback in my previous video that I published yesterday. That is how this buyback will benefit Infosys, how and why will it support stock prices, okay, especially given the macroeconomic pressure and difficulties that IT companies are facing in the present situation. How this buyback is going to help them or to support their stock prices is something that we've discussed. And also, given that Infosys has underperformed compared to its peers over the past 6 months or so, so this stock support will give an edge to the stock. So I've also explained how this buyback is going to improve investor confidence regarding the operational efficiency of the company, okay, and that the company has sufficient cash reserves in place. That's why it's going for this buyback, okay. And I've also explained how there'll be improved earnings per share, because once shares are bought back, to that extent the number of shares gets reduced, and therefore EPS becomes high. And similar to EPS, what happens is even ROE becomes high. Why? Because once the shares are bought back, to that extent the number of outstanding shares get reduced, and therefore return on investment will have to be distributed to the reduced shareholders to that extent. And that is why ROE also improves, EPS also improves. Okay, and I've also explained in detail as to how Fed rate cut is positive for emerging economies like India. What happens when Fed rate is high? What happens when Fed rate is reduced? How it impacts Indian stocks and Indian IT stocks, that is how it benefits IT stocks, is something that I've explained. So you'll get a complete understanding. So check my previous video. I've added link in the description section. There you can see it. So if you're going to see, since 2017, this is Infosys' 5th buyback. Okay, and after this announcement came in, the share price has closed in with 1% gains today. That is as on 12th September. So other stock price and everything I've covered in my previous video in detail. So you'll have to see that. So coming to this exact, now that we have the exact numbers, Infosys will buy back around 10 crore shares. Now this 10 crore shares represents 2.4% of its equity, and the buyback price is 1,800 per share. And if you're going to look at the buyback size, it's rupees 18,000 crores, which is a very large quantity. And if you're going to see what is the premium, so currently it's trading at around 1,500 levels, and therefore buyback price of 1,800 per share, it means that the premium offered over the current market price is around 19 to 20%. So we'll take 19%. Okay. So given that this 18,000 crore rupees is a very big buyback size, which is a very large quantity, where will this amount come from? So this will come from the cash reserves of the company, cash and cash equivalents and reserves. That is where from the buyback will be funded. Okay. So in Q4 of FY24 itself, Infosys has announced that it will be returning 85% of free cash flow to its shareholders. So even this buyback is in alignment with that policy announcement that they made in Q4 of FY24. So if you have to take a look at previous buybacks of Infosys, previously it announced 13,000 crore rupees buyback in 2017. In 2019, the quantum was rupees 8,260 crores for the buyback. In 2021, it became 9,200 crores, and in 2023, it was 9,300 crores. So what's going to happen because of this buyback is that investors' confidence is going to improve in the first thing. That is, the stock price is going to find support, as I've explained in my previous video. Why? Because the company's operations are in place. The company is in a position to buy back shares. It has good cash in its books, and that the company has enough cash. The operations are in place and they're running smoothly. So what market experts think is that following Infosys, even TCS is going to announce its buyback, and all of this combined is going to trigger a rally in IT services stocks. Okay, and one way of looking at it is also that this buyback is giving a signal that the company buying back, that is Infosys, it is looking upon its share value as undervalued or fairly valued, because of which it wants to buy back its shares. Even that is a positive thing that will go on to support the stock price. So if you're going to see what is ahead for Infosys, it has revised its revenue growth guidance for full of FY26 to 1 to 3% in constant currency, which is a positive outlook. Also, if you see, Infosys is continuously and strategically working on its digital transformation and artificial intelligence areas. It is leveraging its AI platform, that is InfosysTopaz, so that it can help clients with AI adoption across various business and technology functions. And how is this represented? And this is reflected in large deals that it has won because of AI-driven efficiency and transformation. But if you're going to look at the global macroeconomic environment, so that is posing a lot of risk for IT companies in general, and also it is impacting Infosys. Factors like geopolitical tensions, inflation, interest rate fluctuations. So because of all of this, what has happened is many countries, including North America, which is Infosys' largest market, they have delayed or cut back on IT spending. So that also affects operations for Infosys. So in terms of challenges, if you have to see, it's a risky global macroeconomic environment that the company is in, that the sector is in. It's facing intense competition as well. And there is this continuous need of adapting to AI-driven future. And to manage talent is also a challenge. So what Morgan Stanley had to say is that after the numbers have come out for the buyback, in absolute terms, this is the largest ever buyback announcement by Infosys and came in higher than our initial estimates. So initially what Morgan Stanley had given the number is that the buyback quantum can be around 10 to 15,000 crores at a 15 to 20% premium. So it's actually coming at 18,000 crores at around 19% premium. Okay. So what Morgan Stanley thinks is that the timelines will be released in due course. That is, as of now, only the board of directors have approved this buyback. The shareholders, the approval is yet to be received, and then there'll be the date that will be announced. And based on a historical experience, they think that it will take around 3 to 4 months for this. So what Morgan Stanley had to say further is that given the current timing, given this is the kind of heightened macro uncertainty that we are facing around tariffs and that US could stop its business to India. So amid all these tensions, the brokerage firm sees this, that is the buyback numbers, as a vote of confidence on the stability in FY26 guidance that the forthcoming results are going to give. So this is the picture of stability that the company has tried to portray, that its operations are well and it's equipped enough. Now we'll see what Nomura has to say. So Nomura has highlighted that Infosys buyback is in line with the stated capital returns policy that it announced in FY24, that it would return 85% of its free cash flows to its shareholders within the 5-year period FY25 to FY29. So what Nomura went on to add further is that we estimate the buyback to be largely EPS neutral in FY26, and Infosys, it has already told that it expects dividends to increase progressively every year. So Nomura further says that Infosys remains one of its top picks in the large cap Indian IT space, and they retain their buy call on the stock. So you might think that just now we discussed that because of buyback, the number of shares outstanding will be reduced and therefore EPS will go up. But now here Nomura says that EPS neutral is what its opinion is. So what does that mean? Why would it would be EPS neutral? Okay. So generally the understanding is that once shares are bought back, to that extent, the shares outstanding gets reduced and earnings get divided to the remaining reduced shareholders, because of which EPS gets enhanced. But the other way of looking at it is the cash and reserves that you're going to use to fund such buybacks, had you invested that somewhere and earned returns out of it, you're missing that. It's an opportunity cost. Right? So there is reduction in returns to that extent. You could have used that cash and reserves elsewhere to obtain returns out of it. And therefore, so foregoing such return out of the cash or reserves used for buyback equals to the enhanced EPS, and therefore it becomes EPS neutral. Okay, so this is one way of looking at it. And moreover, Infosys is a huge company with strong profits. So a buyback of few shares, that is 2.41% of the total equity, may not change the EPS too much. But given uncertainties, given the confusion, given the pressure of macroeconomic conditions, given IT companies are having to adapt to AI and digital transformation, given there has been and there are risk of job loss, given there is risk of India losing IT services contract with the US. So amid all these issues, IT index is under huge pressure. And therefore, this buyback, followed by perhaps TCS buyback and others, can support the stock and can reiterate investors' confidence in the stock and in the sector in general, which could perhaps trigger an IT rally. So also, I would reiterate this, that buyback has been approved by the board of directors and it is yet to be approved by the shareholders, but it would most likely be approved and then things would be proceeded with. And also the record date has not been announced. Okay, and the company in its statement has stated that as on the record date, whoever the shareholder is, they would be eligible for the buyback thing. Okay, and there's also another announcement that came in yesterday, that is as on 11 September, that Infosys has signed a 10-year deal with HanesBrands to drive AI-led digital transformation. So under this 10-year agreement with HanesBrands, Infosys will serve as its strategic collaborator in their digital business applications and data landscape. So as part of this agreement, what Infosys will do is it will use its proprietary platform like live enterprise automation platform, that is LEAP, and InfosysTopaz to help HanesBrands modernize its core operations, enhance agility, simplify its IT landscape, and unlock greater value from data. So that's it for today's video. Subscribe for more such videos. Thank you for watching.